And good morning and welcome to VSA Capital 5 Minute Morning Miner on a beautiful sunny Thursday, the 27th of March. The week is nearly coming to an end. Not quite, but actually I'm heading down for a long weekend in Cornwall tomorrow. Ollie, you were out last night watching squash and having a posh dinner. How are you feeling this morning?
A bit tired. I think I got home about 1:30.
We love it. Come on, let's crack on. Just before we go, I know there's a few bits of news out this morning, but worth mentioning in the FT today is a very big article on ionic rare earths, which is ASX listed actually. But the reason it's in the FT and people getting excited about it is that it's developing a rare earth recycling business in Belfast. Now, they've been going away at this for some time. They're getting various grants from around the UK, etc., etc. It's really interesting what they're doing. To be honest with you, they're not going to get money from institutions, and it would swamp the share price, which sadly has been not a great performer over the last few years. It needs what I describe as National Wealth Fund money and stuff like that, because with the National Wealth Fund, you get 25 million, you have to go and find the other 25 million, which isn't always easy. It's not always easy, but of course we've done it successfully in the past. So it's interesting. I mean, the thing obviously to always remember about rare earths actually aren't rare. It's just that China has them all, or has certainly all the processing capabilities of it, basically. But anyway, I just point that one out in the FT today. It's a good read how to build business in Belfast and stimulate jobs and that sort of thing. So well done. It's come out of Queen's University Belfast. It's a lot of technology. I expect you're a bit too hungover or tired. Sorry, so tired and emotional, Ollie, to have read the FT yet. So go through the news we've got today.
We've got full year results out from a few companies. Capital Limited, which is drilling and mining services. They had a few profits warnings through the year and guided the market to softer results. So no particular surprises, although revenue was actually up 9.3% year on year to $348 million. Although EBITDA was down 13% to $80 million, and net profit after tax was down 52% to $18 million. The dividend was 1.3 cents per share. I mean, they did sell their stake in Predictive Discovery for about $30 million. So that helped the balance sheet. They've, as well as their main business activities in contract work for drilling and mining, they have a sort of exploration strategy, and this has really come off backing Predictive Discovery in Guinea as an early stage project. And they've also got a technology investing side of the business where they've backed MSA Labs and Chrysos, which are related to assay technology. The challenges come is that their contracts rolled off at Sukari, which was Centamin and Belinga, and the market's not really known what they should be looking for, as obviously until you win a contract. It's very difficult to get visibility on earnings. They have announced a new project in Pakistan with Barrick, and obviously that relationship with Barrick, which started in North America and with this technology business, has plenty of opportunity to grow. The share price has been quite weak recently because of this transition, but I would think with the activity that's picking up in the sector, it's probably a reasonable bet that they're going to start picking up business elsewhere, because prior to this transition, the share price was actually a pretty good proxy for the copper price, and in that sense, I guess, just a barometer for mining sentiment generally.
Yeah, you'd think actually it's slightly leveraged into it, really. And obviously, if we are going to have this amazing bull run in commodities, they should be in a pretty good position. So it's probably one to have a good look at. And of course, the copper price is, touching new highs as we speak, so to speak. If they're tied into that, that's also good news. What else, Ollie?
We've got full year results from Ecora Resources, the royalty company. So the results themselves are fairly stable in terms of royalty income. They've got some fairly significant impairments, so non-cash charges, which take the company to a loss for the period, and they've reduced the dividend quite significantly. So 1.11 in the second period, which takes full year to 2.81 versus 8.50 last year. In their new markets, cobalt and copper, they are expecting quite significant growth, both in output and pricing. In the case of cobalt, obviously, DRC implemented a temporary ban to try and get the cobalt price up. So ecora expecting a 60 to 90% increase in cobalt output from their royalties in Canada, and that combined with an increase in price should benefit their revenues from cobalt for next year. They also just did a deal for Mashiko, which is a really interesting structured deal in copper. So that should further increase exposure there. But coal is still by far the largest driver of the portfolio. And since they announced the pivot to sort of clean metals, the share price has struggled, as relatively the actual metals are far less important to the overall portfolio. But we are seeing, almost on a daily basis, headlines about how asset managers are looking at ESG climate targets differently. So perhaps the market will begin to revalue the coal side of this business as well.
Yeah, I mean, coal could go through a similar sort of phase that we're starting to see in oil now, where oil's getting revalued. Anyway, there you go, small red herring. Anything else?
Some drilling results, actually, from a group in Australia. Well, ASX listed Aurum Resources, but they are drilling in Cote d'Ivoire, which we talked about the other day. They've defined about 1.6 million ounces at their Bundiali project, but today's drilling some really impressive results. 83 meters at 4.87 grams a ton. Gold from 106 meters, which included 6.29 meters at 34.94 grams a ton. Almost a meter at 172 grams a ton. 29 meters at 1 gram a ton. 43 meters at 1.4 grams a ton. It's shaping up to be a really strong deposit, I think. And we were talking about strategic investment in the region the other day. I think this is probably another one that is a likely candidate for M&A.
Nothing beats some good drilling results on a Thursday morning, Ollie. I love it. Very good. That'll do for now. I'm sure you'll find someone, or I don't know when Paul's back. Maybe he's back tomorrow. But someone will talk tomorrow. So the 5-minute morning miner will keep on going every day. Thanks a lot.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.